Hassan, what's going on? I think we're live. Let's go ahead and get started. Make sure the audio is working. We're going to cover this. There we go. We're going to cover this new massive rally setup. Well, it's a setup, right? We're going to cover the setup. The big macro technicals are giving us a lot of signals. The macros giving us a lot of very interesting signals. I think the bottoms in fears peaked. Might be a little volatile. We'll see. The VIX got slammed pretty hard, but we're going to go over some of this. And let's start with the S&P technicals really quick, which we are waiting to see how this was going to play out. And what is this, February? This is where I think we're going to have another correction, but I think it's getting pushed back. I'm going to have to push this back. I think our October weakness pretty much got pushed into November. So I'm going to push this back to March. That's where I think we have a bigger sized correction. And I could be 100% wrong, but we'll see how this plays out. A lot of stocks haven't complete. We'd have to, for this to not happen, we would need the leadership to be in a, to be down for at least 3 months. We've been down for 1 month, 3 weeks, and people are flipping out, right? So first signal, our RSI, this is our daily S&P 500. RSI is now above the Bollinger Band midpoint. So we've accelerated above the midpoint. We had a nice little flush here. So we flushed out. We're back above the midpoint. We're back above the faster moving average here. And last time, you can look at these signals. Last couple of times we had these signals where it moved above the red from not really an oversold, but where it started to reaccelerate. And last time we had this, you had the MACD, turnover or, push to the upside right after that. But you had a short little rally here, right? What is this, September till? So you had a good 2-week rally. Another one, you had a good rally, got slammed there. This was a surprise, right? That was a negative surprise. And then we had a blow up again. So for the most part, we've almost completely reset. What we want to see on the weekly is, for when it comes to the RSI, is at least a halfway move. Have we come to the halfway mark yet? Well, not necessarily. We didn't even fall that far. So it's not, that's why I think we're still going to sell off next year. But I think we have a year in rally unless the Fed doesn't cut. Let me make a caveat here. Okay, let me make a caveat here. If the Fed, what is this about? I had a guy, this is about the market rally, right? Basically the market is bottom, but we have some scenarios here. The S&P, the Fed has to cut rates. They've got to cut for us to rally into year end. If they don't cut, I think we delay that till January. We're going to walk through that. But looking at the technicals first, what we're trying to point out here is that we've bottomed in the short term. Okay. And the next, we're usually pretty bullish into Thanksgiving. So I don't think we sell off till Monday. We're going to look at this level here. But anyways, going back to the RSI, we're good. RSI shows when this signal happens, we move up for at least 2 weeks, and it could be even further. Now the MACD, we're getting this crossover barely on our MACD signal. Let me make it a little bigger. Okay. See how we're right at the point of turnover. We're getting ready to push over for MACD. This could look different on the Qs, SMH. We're getting pretty close there, right? Restore pain. We're going to go over the macro, so make sure you guys stick around here. So on the shorter time frame, let's go to the 30-minute. This was the level we needed to flip. The 676 on SPY. We needed to flip that. And I'm going to throw in the Bollinger Band. Look at the Bollinger Band here too. Okay, we're above the midpoint for the Bollinger Band. Also, I got it in black, is that midpoint. So we've now went from oversold momentum, starting to flip back bullish. We're above the mid band. We should be, testing all-time highs. We'll give it a couple days. Monday, I think, is the day. Monday, Tuesday, because that's when we get ISM, manufacturing cycle. All right. So we are starting to turn bullish here. But let's go ahead and talk about these catalysts, right? These are the main catalysts that have the market rally in real terms. Let's switch over to that. Okay. I'm going to click on the photo so we can see them. So these are really kind of the setup that we've walked into. Okay, so bullish signals here. The bull market is back in my view. I think at least more than 50%. There's a greater than 50% chance that we've already had the bottom. Okay, especially if the Fed cuts, it's game over, and we're going to accelerate here. So first and foremost, CNN Fear and Greed Index. That thing is extremely. We're at extreme fear. Okay, last time we had this was the April lows. There's no tariff war. The Fed is actually in cutting mode, right? CapEx is accelerating. Earnings, we had the best earnings, profit margins in 15 years. So we're going to bounce back. You can't stay in extreme fear forever. Of course, we could slide a little lower if the Fed does not cut, but they're going to cut anyway, right? They're just going to cut the next month. And if they don't cut, yields come down. So fear and greed index cannot stay there. How did we even get here? It was the liquidity backdrop. Okay. The TGA, the Treasury General Account, this is basically one of the functions of global liquidity. Okay. 9 trillion. This drawdown is 9 trillion. Well, I call it 10 trillion of buying power. Hold on. Can't even talk here. All right. So we had 950 billion. Let's just call it $1 trillion of liquidity removed from the banking sector, right? Why? Because the banks or the banking sector has to buy this new treasury issuance from the TGA. This is the Treasury's account. They issued so much debt. That debt got bought up by the banks. That means it left the banking sector. If it leaves the banks, they no longer can create new deposits. They can't invest into markets because that money's caught up filling the TGA. This is going to reverse soon, usually reverses in early January, as far as the research I've done, but it is starting to reverse. We're starting to pick up here. And the reversal is Trump, or the Trump administration, spending back into markets, spending back into the economy, putting all that liquidity that was removed to work, right? Spending bills, etc. We're going to get a lot of spending in nuclear technology, whatever. So that slowed liquidity ever since this thing went up. You can see, as it's come down, liquidity has been draining and leaving the system. This is the momentum. Once we flip back positive, markets are going to really push off a lot of that fear of, are we going to have any type of issues in the banking sector, in markets, in the credit market, because liquidity capital would be spending back into the banking sector, right? And they're going to take risks. Keep in mind, the reason this is so significant is, if we're in the fractional reserve system. So if close to $1 trillion is converted or removed from the banking sector, well, you can 10x that and say we have $10 trillion, not really dollars, but credit, 10 trillion buying power. You know how they give you extra margin removed from markets. So that's a big deal. That thing will start to fill back up and we're going to get that liquidity. But for now, that's one of the biggest factors weighing on markets, is the liquidity drawdown. Okay. So the markets are going to need to cut all that debt that was borrowed by the US Treasury, increases the fiscal deficit. So we need a rate cut to lower how much interest they have to pay on that debt. Okay. And it's not really them, because the 10-year yield is the one that runs that. But for the most part, the banking sector needs these cuts also. This is all about the financial system. The banking sector needs these cuts in order to what? In order to make more money, you need to get the rates down that they pay for borrowing and lending. You need to get those rates down below the 10-year yield so they become more profitable, so they can actually extend more credit. So there's an 85% chance, this was yesterday, 85% chance that the market is pricing in that Powell cuts. That's why we're running back up. We've been green for 4 days in a row. This is the biggest factor, I think, because it's all macro, it's all financial cycle. But this is important, right? When it comes to riskier assets, now healthcare, biotech is running up. A lot of the laggers, a lot of the value-ish growth stocks are running up. But that high beta stuff like Oklo, crypto, nuclear, pre-revenue, a lot of pre-revenue stocks who don't have earnings, they need a rate cut a lot more. And the business sector in general, the more risky stuff that's more volatile, needs the ISM to start moving up. We've been in the longest recession for the manufacturing cycle. That matters because once this turns positive, then you have more expansion in small businesses, right? They're actually expanding their employment or maybe CapEx, whatever that is. The most of the CapEx we're getting now is from hyperscalers. But when most of the market gets that expansion, they're literally going to be borrowing more money because there's going to be lower rates. That puts more deposits in the banking sector. They take more risk. So more liquidity, period, once this starts to accelerate. It hasn't really been there, though. We've been stuck. It's also a reflection of business confidence. So we need the cut to increase liquidity in the banking sector and to increase confidence for a lot of businesses, right? Now, here's why we're bullish. We're turning under the hood. We are turning bullish. The market is pricing in the rate cut, period. So we have advancers. This is advance versus decline versus the S&P equal weight. I look at equal weight because it equal weights all the 500 companies, best companies in the S&P. Therefore, you're getting a better read on the health of the overall market. We've been downtrending, but at that same time, advanced decline. So this is how many stocks are advancing versus declining has been rising. Now we hit all-time highs literally today. This is Wednesday, November 26th. So you're breaking out. Advanced decliners is telling you this is a leading indicator. The price is saying that, hey, there's more buyers than sellers for sure. The buying pressure is picking up. And I think a lot of that is the performance chase going back to September. Okay, we zoom in here a little bit. Oh, you can see it. Fund managers were down so much on their gains, right? 2021, they outperformed up 60%. Only 22% of active funds, this includes mutual funds, are actually beating the market. So let's just say 80% of funds are underperforming. So what they do is they start to buy the stuff that was already working. We're going to look at a couple of those stocks later. A lot of the chip stocks and anything that's driving the AI narrative right now. So yeah, they're going to chase. We're seeing that chase happen in real time. Okay, we're seeing it in real time. Why? Because advanced decline, all-time highs, right? They're chasing those stocks. The bull market is expanding. Did I show NVIDIA on here? Yeah. This is very important too. I kind of missed this. After NVIDIA's earnings, NVIDIA sold off and the market expanded, right? It broadened. So there was actually more stocks rising, more variety of stocks rising after NVIDIA earnings. That's a good rotation. They're not holding on to their buying power, buying bonds. They're buying, equity bonds, but they're also buying stocks. So that's a good, healthy signal for market separation expansion. This is when the short-term breath, right? The amount of stocks moving over the 20-day moving average. So the short-term breath, the more volatile part of price action is moving above the 50-day, right? So this is just always an expansion for at least a month. You get at least a month and a half, maybe 90 days when you get the signal. We just had that signal. Now we had it a couple times, but it did not stay. So we need it to be sustained, right? The wider that gap, the more bullish the market is becoming. And it's like it's sort of like a spring, right? This spring try to unravel didn't happen, right? But once it unravels and really starts to go, you're starting to get that money rotate from sector to stock to stock to sector to sector. So we want that full expansion. We're now above the 50% mark. So more than half of the stocks in the S&P, and we'll look at the new one. This was as of yesterday. Today was even more bullish. More than half the stocks in the S&P 500 are above their 20 and 50-day moving averages. So we're picking up. We're starting to expand here. Okay. And I guess the analogy would just be like putting on the gas pedal, right? You're hitting the throttle. Markets. This is the performance chase. Fund managers, maybe retailers, millennials are buying the dip. People are buying the dip, period. On a long-term basis, we're not in the clear yet. We want the 50-day to cross above the 200 when it comes to market breadth. But when we do get that long-term separation, we almost reset back to the April lows. We almost got to 25%. We're at 30. I think 30 was low, right? Let's just say once you expand to the upside, you're in a new cycle period, which I think ends in March, right? February, March. I think we're pushed back a little bit. We might get a lot of momentum in March. I'm sorry, January, February, slowdown in March. Maybe we have a 5-10% correction in April, and then we're back up in May for some other reasons we're going to talk about, right? So this is just tracking the flow here. The whole engine starts to hum. Once you get the blue cross the red, the whole engine, the S&P 500, the equity market really starts to hum. Looking at volume, Okay, when we look at the volume shelves, how much liquidity is standing at these levels, you want to see the S&P get above that 673 level. We got above it. So now I think we test all-time highs. That's the upper level of the volume weighted average in terms of what is it? It is the volume profile if you want to look it up. We bounced off the we came right off the VWAP from the April lows. So from the cycle lows, the volume, basically everybody who bought into the lows, they're buying back their stocks right here. They're buying back S&P. Whoever that is, right? Fund managers, probably mostly institutions, most retail investors don't really buy S&P, they mostly trade it, but this is where they're stepping in and buying that equity. And they had, we had some nice support here, multiple sticks, candlestick capitulations here. So we broke this level. So we're back to bullish territory. I think we need to hold 673. We need to hold 673 post Fed cut. If we hold 673, very bullish. If we get below it, we're at risk to retesting the lows or making new lows, depending on how bad the narrative gets, right? The VIX, I'm guessing going forward when it comes to the VIX got slammed. You're back under 20. So this is a good, strong signal that, whenever the VIX gets below 20 after a big spike, you might be right back in, as long as there's not any negative catalyst. We got past earnings, right? We're in the middle of a clearing event or multiple clearing events. You had earnings season, you have Fed policy, you had the government shutdown. Once the government shutdown ended, this is what started this government shuts down. Now you don't have visibility on earnings. You don't have visibility, not on earnings, on fiscal policy. You have no visibility on the damn data, the macro data. Now that we're getting that visibility, I think we just erased all that fear. Now it's all about the Fed. We need a dovish Fed. So if the Fed is hawkish, we could retest 28. Not even if they're hawkish. If they don't cut, I think we retest 28. For sure, we're going to jump to 20. There's too much volatility going into the meeting. We're going to probably test 20. And if we break, if we get crushed on 20, you got to be bullish. December 10th, I think is going to be the most, 10th, 11th, whatever it is going to be the most bullish period or the most clarity that we get for end of the year, new bull market cycle where we start making multiple new highs, right? Rates are confirming that the Fed must cut. They're rolling over. Long-term rates are pricing in a dovish Fed, a slowing economy for the most part, right? We're not at risk of a fiscal deficit, right? We're not at that risk. The MOVE index represents the Treasury, confidence in buying U.S. bonds. Those bonds are getting bought up. This is the volatility index for that. When there's uncertainty over the next 30 days, it spikes. Usually there's some type of crisis. We're not getting it, right? Triple B spreads. This is people dump. If this goes up, you're getting a dumping of equity debt. And that's starting to turn over. Now, we got to keep our eye on it. But I think as long as that rolls over, then you're basically getting, right, more confidence in the equity market, especially with you hear Oracle giving all this debt out, throwing all this debt out, issuing all kinds of bonds. Oh, is it a bunch of fluff? Well, those bonds are getting bought up for the hyperscalers. Not worried about it. Also, keep in mind one of the biggest things here, it's buyback season. Right after earnings, we get buyback season, right? Generally, it starts in the middle of each earnings season. After they all report, now they start to buy back stocks. November is the month, which is usually why we have the seasonal strength, the Santa Claus rally, they say, because you have a strong retail class, consumer discretionary, a lot more spending in the holiday seasons. Stocks start buying back their shares, so you get a lot more scarcity. So we're heading into buyback season, and usually get about $200 to $300 billion of buybacks. That's a buyback on equities. So you're getting another buyer step in here. The Fed cuts, they're definitely buying back stock. People are buying back stock, investors, institutional retailers, and then some other signals we got that mark the bottom here. Put to call ratio hit the lowest level since April lows. Well, that's a lot of puts. They're not going to last. The peak of these puts is going to be December. Everybody's, even some of you are probably hedging for December, buying VIX December 10th to wait. If the Fed doesn't cut, boom, VIX spikes. So a lot of hedgers, right? A lot of that hedging already got caught off because once we had visibility on the employment market, and really it was the dovish Fed, which we talked about a lot, is if the government opens, it's all about a dovish tone. We're getting that dovish tone by multiple Fed members. And on top of that, let's just talk about this real quick. We had the second highest put volume ever. I mean, that's usually marks the bottom, right? But more importantly, even if the Fed's a little hawkish, you got to keep in mind that we're heading into a period where the Fed governor is going to get announced. The new Fed chairman, I'm sorry, will be announced. Okay, in Christmas is what they say. Who knows? It's supposed to be Christmas. I'm not sure, but that Fed governor, more than likely, if it's Hassett, that's Trump's man. They're going to be cutting rates. You're going to, for the first time, maybe in history, you're going to get a Fed who's actually working with the Treasury, which is not good for inflation, or I don't want to say inflation, deficit spending. But you have, you have Besant. Besant is pretty smart. He's a macro trader. He understands how to get confidence back in the bond market, the equity market, if that were to be the case. So on a technical basis, we went through it. The market is turning bullish for sure. Underneath the hood, where we're accelerating, you got to stay bullish. You have to have more of a bullish bent at this point. You should, at least. You should be expecting a blow off top, a vicious rally if the Fed cuts. And they're probably going to cut. The market is pricing in an 85% chance that Powell cuts. There's a lot of pressure on Powell not to cut. And if he doesn't cut, then we could be retesting these lows, but it's irrelevant because by the time we retest the lows, the market's definitely going to be pricing in a cut for January, and it's just going to be a reset of risk. There's kind of no way out. Okay, there's no way out. We should bounce here. If we don't bounce, well, something more ominous is probably happening geopolitically. I doubt it. I think the Fed has to cut at some point, whether it's December or January, and the market is going to price it in, and it's going to price in May. So I still think we get a vicious rally. Now, moving on to some of these stocks that I think are on fire, and I don't want to wait too long here. Okay, we needed a lot of them to really flesh out and bottom. We're getting a bottoming in some of these stocks. Bullish on the power generation. When we had NVIDIA earnings, what we saw was that there's no slowing down in power compute. There is no slowdown in power compute. Cipher mining got an upgrade the other day. Okay, this is in a bullish, very bullish trend. You can see the RSI try to reset, but it came here last time, right? It sold off at this level. It doesn't have to go to all the way back down. Now, you could look at the weekly chart and say, hey, it'd be better if we came back to the halfway mark. It doesn't need to happen when these stocks, have clear visibility on earnings, which is all that CapEx from the hyperscalers, Oracle, Meta, Google, right? They're all ramping up their AI infrastructure spend, and these stocks are providing the electricity and the compute. So we know their revenues are going to go higher. The question is, when do they get oversold, right? I'm sorry, overbought. And this stock is not overbought. You're going to get that flipping of the MACD. We should be retesting all-time highs. Cipher mining, okay? Let's go through the smaller ones first. Cipher mining, Hut 8, right? They're mostly nat gas. Now, keep in mind, Cipher does provide this, but they don't provide their own energy. So this is more like Applied Digital. I want to put these in the same basket. Cipher and APLD are both data infrastructure, data center build outs. But when it comes to their revenue structure, when it comes to their fundamentals, they have to actually source out their energy, their power. They have to source their power out. So these are similar stocks. They still have a lot of data center build out, but maybe even stronger. And I could be wrong. Maybe it's more profitable for them not to have to provide their own energy. Maybe it's better that they source out the energy. I don't think so in this period of time, but maybe later down the road, it could be, because if inflation ramps up, well, they're going to benefit from that. Next, you have Hut, nat gas producer. This is a data center build out. Do they still do Bitcoin mining? They still host Bitcoin mining, data center build out, cloud computing, servers, and a lot of chips, right? So technically, same thing. They're all looking the same. They're about to cross over. They're accelerating. I want to point these out in bullish. Wolf is a little unique because I feel like it's undervalued by a lot of analysts, but they have the deal with Google. Google has a 14% stake. As a matter of fact, the biggest stake in this power generation name, who's providing data centers, power compute, blah, 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 etc. Right? So TeraWulf, I think, is underappreciated at this point. Now it's, the MACD's crossing over as we speak. Okay, crossing over as we speak. We had this decline, and you call it a wedge, whatever you want to call it. Got a little bullish. Let's just say this is it. It's near that level where I think it looks like iron. It just breaks out. Okay, it breaks out of this. I've been saying this for a while. I think that's going to happen. I think it's going to break out of this range here. And really quick, going back to HUT on a technical level, HUT actually looks the healthiest, right? If you go to the weekly chart, it looks the healthiest because it came back to that halfway mark on the RSI, had a little sharper sell off from 60 down to 31, a 50% retracement. A lot of them did, but it has a lot more support at this level where the other ones are much higher. Now you could say the other ones have more trend, they have more buyers, so maybe that's it. But I do like when we come back and touch a level, it looks a little healthier for me. Okay. So, anyways, back to it. Terra Wolf Hut. And then let's go to Iron. What is Iron looking like? Okay. Iris Energy. And on the weekly, we look like we're gonna turn weak. And it is struggling actually at the moment. It's actually the weakest out of the four that I chose. It is the weakest looking at the moment. And that could be because a lot of people had profits, big profits in this. It ran up the most. So it might need a longer time to rest. Okay. It just might need a longer time to rest. So we'll see how that plays out. I'm not interested in Mara or I think these stocks are way too weak. Mara and who's the other one? That was we're not going to talk about them. Okay. Now the bigger power producers, these are more so full scale power utility companies, meaning they're going to power neighborhoods, industrial manufacturing, and cities. I got CEG. Okay, really, this thing's been consolidating for the entire year, all the way back to January. It's at the same spot. This is going to make a monster move. It's more sustainable. It's also its main source of power generation is nuclear. Therefore, I mean, nuclear energy is a very strong theme that is starting to pick up. You see it in Oklo and these other technologies, but they're actually building nuclear facilities and a lot of nuclear power in different places. There's about $350 billion going into nuclear energy itself. So CEG is an easy buy. It is a little more expensive. Then you got GE Vernova. Okay, GE Vernova, very strong stock. This company produces a lot of the turbines and nat gas for and infrastructure for these AI compute facilities. So GE Vernova and CEG, very strong stocks on a technical basis. They look good. They're medium, right? They're bigger. They're large cap stocks. So they're not going to fly like the wolves, like the Terra Wolves. They're not going to fly like the Terra Wolf or Cipher Mining or Applied Digital or Hut 8 Iron. They're not going to fly, but they're a little sure. They're more sure bets. I don't even want to say they're more sure bets because honestly, those other stocks are vicious. Hut, those smaller cloud compute, right? Cloud compute / Bitcoin mining stocks, man, they have strong fundamentals behind them. Okay. Now let's move to some of these chip stocks. Thoughts on Galaxy? I'm not a fan. I'm not a fan of Galaxy. And I could be wrong. Maybe I just didn't look into it as enough. It's probably on the same stage as the rest of these. I have to do more analysis. I don't want to speak of it too much. I need to, as far as I've seen, I like the four that I mentioned a little more. Hold on. I like those four a little more for different reasons. And Galaxy Digital is, I just haven't done enough research on it. You got to pick one. It does look like it might have a lot of room though. It looks healthy, right? I need to find out if they're mining Bitcoin, how much Bitcoin they're holding, how many facilities are they powering? Are they outsourcing electricity? I don't really know all that. I don't know enough on them on a technical basis. I'm sure it accelerates, but you might need the Clarity Act because I'm guessing they hold crypto, right? Where Hut, let me put it this way, Hut holds a lot of crypto also, but it's nat gas. So it's, there's so much nat gas. And really, Iron holds no crypto. So this is pure data center play, right? Wolf, pure data center play. If I had a guess, I want to guess that Wolf outperforms. That's going to be my guess. simply because a lot of people don't know about it. And Google has a 16% stake if I had to bet on all of them. You see, Google is becoming the biggest stock in the market at the moment. They're coming out with TPUs and all this crap, right? All this extra stuff. Who knows? Google has the best balance sheet by far, best fundamentals out of the Mac 7. It is emerging as the best fundamentals play, and they're pouring a lot of their infrastructure spend into TeraWolf. Okay. And when I say a lot, I don't mean 50%, but they're really partnering with TeraWolf, and I believe they're going to do more stuff down the road. So I'm very bullish on TeraWolf. Chip stocks, these don't slow down. Micron is a leader in this is why I think we're going to get a correction in March. This thing went up from April from 62. They're up a lot. These are big market caps, and the market typically so basically there's a shortage of memory chips. Micron is a leader in memory chips, and eventually, yeah, there's more demand, but eventually they're going to price into 2026, and it's going to look a lot like NVIDIA, where NVIDIA gets stuck because it quickly prices in, right? NVIDIA hasn't really made new highs. It's made new highs, but it really isn't trending. It hasn't been trending since the summertime because it prices in a whole lot of demand really quickly. And I think Micron's going to do that. I'm still bullish. I still think it goes to 300. I could be wrong, but the technicals tell me that it can't keep up forever. Okay. So you're overbought. You pull back, you probably get overbought again, but does that last another 12 months or only 3 months or 4 or 6 months? I don't know. We'll see in the next earnings. Okay, so you got Micron there. I'm still bullish on Qualcomm, even though they're lagging. I'm starting to get pissed. AMD, same thing. They just ran up so quick, and they're big cap stocks. They can't keep up that type of momentum. Western Digital, these are suppliers of data storage supplier chips. So this is data storage, bullish. STX, bullish. And I think there's a new one, SanDisk, just entered the S&P 500, bullish. You'd have to go to the daily chart for these. I'd wait on this one. I would wait on Western Digital. Does this one look better? Maybe, maybe not. I don't think so. STX, I don't think so. I think these have a couple more weeks or months of consolidation before you can really get long. Now, Micron is a clear leader, so I think it consolidates further. I don't think it just shoots straight up. I think it's going to consolidate and then shoot straight up. Who knows? Now, compute storage data centers, very bullish on these. Okay. Applied Digital is a lot like Cypher. So same thing, except for they rent out electricity, and they also host Bitcoin miners. So they're going to make money no matter what. The stock sold off a lot. Applied Digital, I'm just throwing some out there. I'm not, we're not super bullish yet, but you can see on the RSI, it's already starting to take off. So that could be oversold. CoreWeave, very bullish on CoreWeave. Extremely technically oversold. This is the leader. They're doing a lot of innovative stuff. So CoreWeave, I think over the next 3 months, it's going to go up to 100 and then probably consolidate, maybe retest 85, right? I think it's going to take some time because the narrative needs to be worked out, but eventually CoreWeave is going to break out. I think end of year or by September. I think the peak of the bull market is going to be July. When I look at the data, July has been the strongest month of all time in markets. So CoreWeave 118, yeah, it'll catch up to 118. I think CoreWeave is going to squeeze a lot of the shorts, and I think it goes back to all-time highs. I think it goes to 200. It just has a lot of technical momentum. It needs one narrative shift, and then it's game over. This is a gigantic, flag pattern. So if this thing breaks out, I think it can really. They're just doing a lot of stuff. They're more than just a power. No, I don't want to call them power generation. They rent out their power, but they are one of the biggest individual pure compute. They have their own cloud. They might even invent or create a new type of computing service outside of the normal IRNs and these other plays. So they might do something new from what I've seen. They're building something completely new, or at least they're trying to. So if that narrative leaks or comes out, they go to 300, right? It's a 100 and something $billion company for that reason. We'll see, because the Microsoft is slowing down on compute. They don't want to develop it themselves. They don't want to overbuild. They're being capital. They've already deployed a lot of capital. So VRT, I'm not a big fan of this one. I think this is a portfolio buy. You just buy. I think this is a buy the dip play. Okay, but when it comes to those momentum plays, CoreWeave and Nebius, CoreWeave and Nebius are doing some special things here, and I was late to the party. Now I'm very bullish. Nebius is going to be more so in Europe. So you have, who else do you have in Europe? You have a couple big companies in Europe, a lot of infrastructure for AI, but Europe is behind. They're going to play catch up. They're going to catch up. As soon as the Fed cuts rates, that accelerates a lot of capital in Europe, and Nebius Group is the leader in that. Okay, so we're talking compute, data store, well, really compute, data center, cloud compute, data center stocks right here. And those, I'm very bullish on there. Now, when it comes to software plays, I'm going to, after doing a little more research, nobody knows who the winners are going to be. We don't know. We got to wait for the earnings on a lot of these. Twilio did well, bullish on Twilio. I sent out a thing on that. So Twilio does well, but I think these stocks have less. The narrative needs to play out more. Okay, now Twilio looks great on a weekly basis. Okay, look at this big wedge pattern. Okay, gigantic wedge. Okay, so it needs to break out though. We haven't got the breakout yet. It needs to clear. I want to say it needs to clear 145, 150. Once you clear that, I mean, it's off to the races. It's expanding. I'd keep my eye on Twilio though. This might have one of the best technical setups. It's just not in. It's not ready to go yet. Okay, because all these tech plays, who is it? OpenAI is disrupting a lot of the agentic workflow stocks. It's literally trying to do what they do. It's disrupting a lot of agentic AI. Where when it comes to compute and data storage, and when it comes to power and electricity, they are paying those companies. OpenAI is paying those companies to generate electricity and compute. So these are competing with OpenAI and Microsoft and Google. So it's a little tougher to call these stocks on a fundamental basis. They really have to perform. I do like ServiceNow, but the market is saying, hey, you're not ready yet. So even though they beat earnings, the market is saying, hey, we need to see more, execution. Maybe your valuation is up too much, or maybe the Fed needs to just cut rates. So once the Fed cuts, we'll see price action if it can start to perform. We're almost at an oversold condition. If we do get oversold on the weekly, that's one of the best setups you can get, is an oversold weekly in a strong agentic narrative. And ServiceNow isn't necessarily creating its own agents. It's more background operations. So it helps the agentic stuff like Salesforce. It helps Salesforce operations on the back end when it comes to IT services, right? So this is more workflow, which I don't think gets disrupted by OpenAI. I like this stock a lot. Where CRM, the market is really discounting CRM, saying, we don't know. They just acquired 3 companies, by the way. So I know I'm talking a lot of fundamentals here, but these stocks, this is important. We're in an AI race. That means the indexes go higher and the winners go up. Not everybody's going to be a winner, right? When it comes to electricity and compute, they're all winners. Not every single stock. I'm saying you can have a bigger basket of winners because there's not enough electricity. There's not enough compute and there's not enough electricity. That is my main theme going forward for the market. I don't know how long it's going to take, but there's not enough. The stocks that provide where there's not enough, they have to win. They have to win. At least over the next 6 months, they have to win. Where when it comes to agentic AI, we're not even sure what's going to happen here. So you see these stocks are struggling. Software is struggling. Software security, different story, but I'm not going into software security. Datadog is underperforming. We're not going to talk about this right now. I'm not making a stream about picking stocks yet. This is about the bull market is here. You need to pick some lows. You need to find out who you want. Xometry is killing it. Okay. I'm telling you right now, this is a very most people don't even know what this is. The manufacturing cycle will accelerate with CapEx. You got stock buybacks. You got the big, beautiful bill. Trump is doing what? The Trump administration is trying to accelerate manufacturing in the US. This stock is the Amazon marketplace for custom build manufacturing. And they have a lot of customers. They have a lot of, it basically it meets buyers and sellers. They pay a fee. It meets them instantly. It solves a real problem using AI. And they have physical warehouses where they actually 3D print parts. So Xometry, very bullish on it. I just think it got over, it's exhausted. The stock is exhausted. It needs to slow down. It's slowing on the daily. It's not there yet. Not ready. Symbotic, if you had been following us in the Discord, or even we've been calling this stock forever. This is warehouse robotics, one of the leaders in robotic companies, absolute monster. You want to own this stock. The revenue, how do I say it? This stock is not profitable yet. This company is not profitable, but the amount is because they're pouring so much of their income, right? Or they're not making income, but so much of their revenue is getting redistributed into the AI part. It's AI robotics, into the physical robotics and expansion. So either way, this is the strongest warehouse robotics play I see in the market. Other than obviously Amazon has its own robots, but you're buying the whole Amazon, business model, which is safer, but not as explosive. This could be $100 billion company, 150 billion. I think it's a little overdone. I think it needs to consolidate. Down here was a good buy. Look how quick it moves though, right? This stock, you have to buy the dips on these because they move so quickly. It went from 40, it doubled, almost doubled in 3 days, 4 days, right? In a week. That's why they're not like, you have to buy them when they're cheap because they get expensive quick. Okay. So you have some other robotic plays. Again, I'm not going through all of them. I'm just going through the ones that I think can really perform. Rocket Labs is consolidating. This stock has been waiting for a while. You just need one positive catalyst. It is pre-revenue. It is a high-risk stock that is disrupting and creating a new market that never existed. It's competing with Starlink to some degree and SpaceX. You want to trade this. You want to own the stock. This is one of the future stocks because it's going to go up a lot, not because it's going to win, but look who's competing in the mega cap space. Hyperscalers, Amazon, Apple, Google, Meta. They're all trillion-dollar stocks and they're all competing. So Rocket Lab is going to be competing. It doesn't mean it goes to zero or it doesn't go up. It's going to compete. It's going to get a lot of market share and multiple expansion as these partnerships and these deals get built out. And as the US, you guys got to keep in mind, the US is in a war with China to build AI technology and to build into space. There are going to be data centers in space. And so this is the biggest technical revolution in history because of AI. Okay, everybody can use it. Lululemon looks amazing. I know it's been a while. It's taking forever. I'm down on my call options. I'm actually developing new ways to reduce risk so they're not so volatile, these options. But anyways, look at this. We're on the weekly. You're getting a bullish crossover on the weekly. You want something 6 months out. Okay. If you want to be more risk averse, wait for earnings. Okay. Wait for earnings. It has a long way to go. The balance sheet is still good. This is a very strong business, a lot of cash flow. They're expanding into China and India. They're doing jerseys. I'm not a big fan of retail stuff anyways. I think it's stupid. I'm more of a minimalist. Not stupid, but it's not my thing. I like food and fitness. Either way, Lululemon, well, I guess they do have some fitness stuff, but they're getting killed. They are expanding into jerseys and football and sports or whatever it is. They're doing new stuff. So we'll see how that plays out. But on a technical basis, RSI is accelerating on the weekly. MACD accelerating on the weekly. Go to the daily chart. This is probably one of the best charts I've seen. They just need one good earnings report and this thing explodes. Daily exploding. MACD daily exploding. Bollinger Bands coming off, right? Look at this compression. When the Bollinger Bands compress for this long, you're going to get a very explosive breakout. So Lululemon is on watch. Oh, it's not above the Bollinger Band yet, right? It could get rejected here, but I would keep my eye on it because we're heading into the big, beautiful bill, which is the biggest tax cut in history to accelerate the consumer discretionary space. and you're going to get a lot more manufacturing jobs picking up. People are going to buy stuff. Their kids like Lululemon. A lot of older rich people are buying presents and footwear. They're filthy rich, and their baby boomers are purchasing near 52-week lows as well, 100%. So you just got to be patient with Lululemon. I think this stock, if you stay patient with it, it can be one of the easiest trades, just because all the technicals are pointing to it wants to rip. It wants to rip much higher. They just need a positive catalyst. The market is hitting it because they're too expensive and they haven't innovated. They'll take care of that. These consumer names always take care of that innovation part. All right, who else we got here? Novo Nordisk. We'll see. Novo Nordisk also has some of the best technical setups for a recovery. Doesn't mean it goes up because it doesn't have momentum. Obviously, there's a lack of enthusiasm in these stocks, but they're showing signs of strength and recovery. Okay, and these can be some of the best trades ever that you can make. Investment wise, would I invest in Novo Nordisk? Not really. Don't care. I don't care about Lululemon. They're not changing the world, but as a trade, they look good. Okay, because they can be disrupted at any time. Yeah, Novo Nordisk. Okay, they're coming out with their new GLP-1s. They're supposed to create one. I don't know. Go look it up. They're doing some crap. Double bottoming here, right? All the way back to 2021 lows. You got a double bottom. You have a nice green candle starting to pick up. You have the RSI picking up. That's bullish divergence. So we have bullish divergence on the daily chart. We also have some, look at these constantly oversold. This thing's going to pop, and eventually it's going to carry over and rip a lot higher. So I'm keeping my eye on this one. All right, let's keep going. Quantums are look at the quantum stocks are just like Oklo and these nuclears. They need the Fed to cut rates. They need rate cuts. They need enthusiasm. I'm not going over them yet, but they do look juicy. They do look juicy. If they don't get the rate cut, or if they don't get positive enthusiasm, they can make new lows. So I'm not looking at those yet. ASTS. Wow. This stock has one of the biggest total addressable markets. Okay. Telecom. This is directly competing with Elon's Starlink. This is direct to mobile, so you don't need these big towers and direct to mobile 5G. Direct to mobile 5G. That's a gigantic total addressable market. It's in the trillions, and they're working with Verizon and these other, because they're trying to on-ramp it. It's going to be a lot of infrastructure, it's not going to become a Verizon. It's an infrastructure play, which means they're going to create a revenue stream from these bigger telecom companies. Would you say? Yeah, I think it's that support. I just, you never know what's going to happen with CapEx. It is bouncing here. It looks beautiful. I'm just waiting for the trend break. Everything else screams bounce. Everything screams bounce here. I would like to have seen it a little stronger after this rip lower, right? Kind of like who got ripped lower. Once they get an analyst upgrade, it's going to blow up. It's going to blow up. So I'm waiting I want to see the move over 60. Once we get over 60, I'm more than likely going to buy this on the next pullback. I don't want to buy this though. This thing can go lower. It's very high risk. Okay. There is no revenue. They're investing, they're taking out a lot of debt and investing so much that the company is at risk. When I say at risk, they're gonna get what they need, but you don't want to take that risk until you see momentum come into the stock. Because like before, right, went from 62 down to 40, went from 90 or 100 down to 59. That's the reason it has big swings, is because the trajectory of the business has big swings. You want to wait for these swings to confirm with price action. But it looks great. I still think, like, if I had a bet with all the stimulus and all the innovation, this is going to be a big this is going to be a stock you want to trade for the next couple of years. I think it's going to come mainstream once they turn positive on profit. Once they turn positive profitability, woo, it's gonna be $100 billion stock, more than likely. All right, we're gonna finish off here with Tesla. Looks good. We're not gonna finish with Tesla. We're gonna finish off with crypto. Okay, we're gonna finish off with crypto. Bitcoin's oversold, right? Deep oversold territory. Everybody's doubting Bitcoin. The Fed cuts rates, it explodes. It is double bottoming here. It's consolidating. There's no more 4-year cycle because you have institutions, you have ETFs. MicroStrategy got ripped. I got ripped on that. But I would say wait for MSTR to really break the downtrend. Either way, Bitcoin looks better. There's a lot of Bitcoin buyers. The whales are buying in right now. And I would not doubt that Bitcoin is not going higher. They doubt it all the time. It gets more bullish the lower it gets in an up financial cycle. Does BTC trend look bearish to you? The weekly chart, no, this is a bullish trend. So let's do trend. Look, we're still in a bullish trend. Okay, we're not in a weak trend. We're still in a bullish trend, no matter how you draw it up. We're still in a bullish trend for sure. The question is, are we in a macro bullish trend? That Bitcoin is all macro, and the Fed is still cutting, right? Trump is still doing tax cuts. The SLR requirements for banks is going lower, so you can buy more treasuries, which increases liquidity. The ISM is still below 50. I think that's literally what Bitcoin's running into, is a weak ISM. When the ISM gets above 50, Bitcoin goes stupid every single time. ETH USD, we could retest. We're near a bottom. I think we're bottoming out here, but ETH is near a bottom. If we do turn lower, I think it bottoms at 20. I want to say 2,500, but maybe it bottoms even lower. Maybe it bottoms at 22, 2,300. Who knows? Chainlink, I'm the most bullish on by far. I think agentic AI is going to need Chainlink services. This is a spring just loading. This is the most bullish asset in my view still. Yes, it's taken forever, but good things take a while. I think it's still the best opportunity in all of markets, because agentic AI, it's building the rails for agents to get clean, verifiable data and execute smart contracts themselves. So agents need a source of truth, or else you get a real cybersecurity risk and a mess on the internet. I think Chainlink is building those rails as we speak, not just for finance, but for all data. This is a play on the new data transfer system, a verifiable internet, right? Not Ethereum, Chainlink. Ethereum is something a little different. So very bullish on Chainlink, and it's at the lows. I mean, you got to dip by here. You got to dip by on Chainlink. This is where you make the money, is when these things get killed. Look, every single time people doubted Chainlink. Oh my gosh, this is the utility coin for crypto. And I know people are getting pissed at crypto and they're tired of it. Why did I buy it? That's how you know you're near bottom, right? Once you get down here, it rips. It ripped here 200%, ripped here 150%. We're going to rip again back to the highs. And if the Clarity Act, this is why I'm so bullish, it's an easy win. Okay, the financial cycle is still on. We're still early. The Fed is still cutting rates. The Fed balance sheet is still. The Fed balance sheet is going to stop going down December 1st in 4 days. Okay, so you still have QE, right? This thing is going to turn up. That is an increase in money supply. And then you have US interest rates obviously going down. And then you also have the ISM, so US business confidence. This is what really runs crypto. Okay. Above 50, we've been below 50, but once you get above 50, here's the top in Bitcoin and crypto every single time. Once you get above 50, you really start to accelerate. So the most important indicator for me, we kind of know the Fed is cutting rates, whether it's the 10th or January, they're going to be cutting rates. You want to see the ISM when it comes to crypto. I still think the best opportunity is in crypto. Circle looks great. Everybody's building their own stable coins. Still looks good. Why? Because it got absolutely murdered. It got absolutely murdered. Look at that. Okay. Do not throw this away. They're building more services on top of just stablecoin issuance. These companies with AI, they're using AI. They're able to generate new businesses, right, that never happened before. A lot of them are risky. They won't work. But the ones that do work will crush. And Circle is one of those. So Circle, BM&R is going to go up. Circle, Chainlink, Bitcoin, Ethereum, MicroStrategy, nothing has changed here. With my most bullish take is going to be Chainlink. And it's been a while, but we'll talk about that quickly. I didn't talk about these. Oklo, waiting for the Fed to cut rates. If the Fed cuts rates, Oklo is going back to 200. Okay, Oklo is going back to 200. The technicals look at this curl up on the RSI. It's getting ready to expand again. So Oklo, SMR, I'm not sure. I got to double check. This shouldn't have happened. This looks very bearish. I do not like this. It needs a sharp recovery. It's not happening. I don't like it. I would still nibble, but I'd wait for that momentum to pick up. That looks ugly. Just looking at price a lot of times, it could have bottomed out, but it looks a little uglier. And the next one is nano nuclear. Nano nuclear. This one looks better. I like this one. Still in an uptrend. We're still in an uptrend here, right? So this is where all the alpha happens, is in the bottom of these uptrends. I mean, I wish I was a little more wiser and really was more patient for these downturns to buy at these, these trend lows. I wish I was more patient. Sometimes looking at stocks too much makes you buy them stupid. Or makes you trade and you shouldn't. But this is where you really want to get long if you're not long at all, around these areas. All right. That's all I have for everybody today. Hope everybody's blessed. Have a good weekend. Happy Thanksgiving. So you got to be bullish. We'll see if the Fed cuts rates. The most important indicator right now, the Fed needs to cut rates, and the ISM is going to be probably negative on Monday. But if the Fed cuts rates, the market's going to believe the ISM is now going to pick up. We know it. Supply chain managers just gain more revenue. So we'll watch how the Fed cuts. I'll be live for that meeting, and I'll catch you guys next time. Stay blessed. Thank you.